Hello, I'm Amrit. I'm the co-founder and CEO of Hyperexponential, and I'm your host. I'm delighted to welcome you to the Underwriting Intelligence Podcast. Today, I'm thrilled to be joined by Gilbert Harrap, co-founder and CEO of InsurX. Gilbert, welcome. Could you tell us a little bit about you, your journey, and what you do at InsurX today?
Hi, Amrit. Yeah, great to be here and really excited to tell you a little bit about InsurX. At InsurX, we're building technology that links brokers and insurers together so they can trade more efficiently with each other. Today, we're super focused in the London insurance market, and a lot of the business we're doing is what's called smart follow business. Although I think we have bigger aspirations, and we believe in a world where risk can be frictionally traded between any broker and any insurer, and that's the world we're looking to build.
Amazing. So Gilbert, I always love the origin story of startups. So maybe we could start, you come from the market. I'm really interested in like the actual problems you saw when it comes to kind of underwriting, capacity, distribution, appetite, connection, and all of the things that sit around insurance that led to you actually starting InsurX, and also particularly like your own experiences that can often kind of shape the business's trajectory a lot. So can you tell us about that?
Yeah, I sort of deeply frustrated. I started my career as an underwriter, and I always say I love working with people and numbers. So the insurance market suited me kind of perfectly. But I was also deeply frustrated by this market. I thought it could do it so much better. There's fundamentally insurance is this product. This is we don't sell a physical commodity. We sell that risk transfer, and yet the market doesn't take advantage, in my view, of anywhere near enough of the data that was available even then when I was on the underwriting side back in 2010. And so I was kind of really frustrated about it. I kept sort of saying to my bosses, "There's got to be a better way we can do this. Can we not use more data? Can we not sort of analyze the portfolio at a bigger level?" And I kept saying, "Don't worry about it. Just sort of focus on doing your job." And that really sort of deeply frustrated me. And that kind of put me on a course to ultimately setting up an InsurX. It probably took me another 5 years, but
That's a very familiar story. The phrase that I use, I'm on the record on other podcasts, is frustration. They call it frustration-driven development, right? So I can very much relate to that. Do you know though, Gilbert, the words that you just said, they resonate a lot. And if you were to ask someone who works in the market over even the last 20 years, right, about data bottlenecks, friction bottlenecks, this has been a very familiar story, but you look at InsurX, you look at where you've got to today, more than $100 million traded on the platform in very short order. Something has happened in the market in the moment. Your technology must speak for itself on that side, but also the market clearly is more amenable to this. So I'm really interested if like you see a point in time right now with either the people, the technology, the market environment that has led to the kind of takeoff of InsurX or related to that.
Yeah, look, I think a lot of people have been talking about this happening in the market for quite a long time, and as you said, I'm not the first person to be frustrated. I'm definitely not the only one. I think there has been a growing movement of people with that frustration. I think there's also the cost of the technology that is needed to kind of solve some of these problems has been coming down, and so that has meant that a lot more can be done. Bigger problems can be solved. And so historically, problems they couldn't be solved because you'd have to spend too much money for the kind of the benefit that it would give the client, or it'd give the broker, or it'd give the insurer. And so that's been coming down. Look, we're also building on a lot of good work that was done by people before us, right? And then sort of that kind of people have been chipping away at this problem, and I think we're just very lucky. There's a little bit of some market timing. I think COVID was a massive jolt for the industry. It suddenly forced a whole load of people to work remotely for two years. This London market that had sort of always done things in a sort of set way suddenly had to do it completely differently. It had to be completely remote, and a whole load of things actually were even less efficient. And I think that galvanized people to think, actually, let's try and change it. And so that kind of having that kind of that sort of hotbed of desire maybe from both the brokers and the insurers, then means if you can actually develop the right technology, and ultimately the right solutions out of that technology, then you can get kind of pretty rapid adoption. And I think that's what we're kind of broadly seeing across smart follow. And I think it's going to grow to what we're now calling smart trading. Actually, how does the whole both lead and follow start trading in a more kind of data-driven, algorithmic manner?
Yeah. I'm excited to talk to you a little bit more about smart trading. Like, your vision for this, I think, is very exciting and far ahead of, I think, what we're seeing in the market today. Just talking a little bit about the advances in technology, I'd love to, hear a little bit about how you've leveraged the latest technology. And, we're talking earlier about AI, how that's changing what's completely possible when someone fires an email over to a platform now. So how has that changed the way InsurX works? And I suppose I'm interested in you as a founder who's, a bit like me, insurance practitioner turned technology entrepreneur, have been embracing that inside InsurX.
Yeah, I mean, what a time to set up a technology business. We are
Yes,
so lucky. It
very.
is absolutely amazing what is now possible. We're doing stuff that, 10, 15 years ago, you just simply could not do. And it's mind boggling. So great time to be doing this. And look, kind of fundamentally, InsurX, we do a few things. Personally, we do a lot of ingestion. So we have to take in data, typically unstructured data. The industry's had lots of this. It's emails, it's SOVs, it's PDFs. Take that data in and turn it into structured data. And that, AI is fantastic at. You still need to understand how you're trying to structure that data. You need to build a data model. And so we've spent a lot of the last 4 years really, really focused on trying to understand how to kind of model insurance data. And that's the kind of, real core of, I guess, kind of what we do and what we believe adds value for customers. Once you've got structured data, then you can do some really cool things with it. And so, the core of our matching engine is how do we structure a risk emission, and then how do we match it against a bunch of carrier appetites? And, we now have 25 insurers deploying smart follow capacity and using InsurX's technology. Well, that matching process, we built a kind of matching engine that would be similar in other parts of the kind of financial markets. We built one for the insurance market. So we've got that sort of second part, I suppose, of our technologies around that kind of matching capability. And then we built a whole suite of technologies around binding and reporting data out to insurers, so they can actually understand in a more live time environment what are the risks that they're now either quoting or binding on. And that's something that the insurance market has operated at this kind of cadence of maybe a once a month renewal, or kind of, how do we do it 1/1? And it's sort of, you spend kind of the next 3 months trying to work out how 1/1 went. What we're trying to turn that is to kind of how will the end of the month go, and kind of be able to see in live time kind of how your quoting book is doing and how that'll convert into bound, and how you're trending, and turning just, fundamentally to a dynamic portfolio.
Yeah. I love that. I think you're one of these businesses. I think maybe HX is very similar, actually, where if you look at the job to be done that sits around your technology, what it actually happens today versus what people would like to do is like very different, right? And like, it's been really interesting, just even the way you describe the end-to-end process of that is just like actually how much inefficiency sits in that process, and how, like, if you were to ask someone to describe that job, they wouldn't describe the end state that you're talking about there. They talk about huge amounts of time tidying, cleansing data, right? Big lags between that information being in the system and being able to report on it. And it's just so interesting, as you say, what the technology is allowed to like shrink the time for that so that people have more time for the important parts on each end of the process, right?
It's freeing up so much time. I mean, the crazy thing about this is you've got, certainly in the London market, you've got multiple entities all doing things really, so not badly is the wrong way to say it, but doing in a time inefficient manner, given the current technology that's now available. And what this technology is going to free people up to do is be able to use that effort, that resource, in so many better ways. And so we're so excited about the results that will come out of this, because it's going to really free people up to kind of to focus on what really matters.
Yeah, and maybe actually, I'd like to come back to that. But before that, let's jump into smart follow in a bit more detail, because actually this phrase, smart follow, it means different things to different people. You're seeing an efflorescence of different solutions to this. in the market from carriers. You're seeing new technology platforms come up. So, how do you think about different approaches to smart follow, and where does InsurX fit into this?
Yeah, so look, the London market's kind of been famous for syndication of risk for a very long time. And in that dynamic, you have a leader who sets the price, and then there's a number of followers traditionally found by a broker who will say, actually, that seems like a good price. I'm not going to compete against it. I will just kind of match that, and it will support that. And that allows for very large risks to be traded, or very complex risks to be traded. And that's a kind of it's a beautiful process. The challenge is getting that lead turn is almost as much effort as to get the rest of the follow capacity in the traditional model. And we call that traditional model now sort of slow follow against what is smart follow. And so we define smart follow as anything where a broker can get an instant answer on whether they're going to have follow capacity, rather than going on a traditional process of speaking to each underwriter and asking them for the terms, doing that kind of open market broking. Now that open market broking might happen via phone calls or emails, but it's still a kind of a point-to-point connection between a broker saying, look, would you do this? Waiting for a response, coming back. And really smart follow is how can a broker get lead terms and then know instantly what they'll get on the follow. And that can be done in a variety of different ways. And we're seeing different business models emerge. You've got the key style, more algorithmic type of smart follow. You've got the kind of the tracker facilities that have increasingly been growing in the market, with Aon Client Treaty and certain carriers that have been backing that sort of strategy very heavily. And then we think there's actually going to be a sort of blend of those two, sort of more sort of broker built facilities that are then going to have more algorithmic trading on them. So it's going to be a really interesting kind of spectrum emerging out of that. But all of that will give the brokers much faster answers to, okay, we've got a lead terms, can it be supported by additional follow capacity?
Yeah. And I think, you touched on the results of doing this really effectively, the time being freed up. I'm really interested, as part of the pitch that you make, when you see InsurX working really well and you see the impact on both sides, right? The broker side and the carrier side, like, what is the uplift, right? Like, what is the enhancement to the work on either side? And actually, you talked about the like that friction being taken away and people having more time to do the important things. Like, what actually happens as an outcome there?
Yeah, so look, this is partly why this space is growing so quickly. It's that the benefits are now out there and they're understood fairly clearly by both sides. So from the insurer side, it's quite simple. You haven't got big teams of people receiving individual risks in, manually then underwriting it, understanding, okay, what's the pricing on this, emailing back a decision, right, this is what we do to support, maybe multiple iterations of back and forth. And then if there is a decision to bind, then going, okay, right, now we need to manually extract data out of all these SOVs, submissions, and start entering them into policy administrations of various other systems that have been built up that are kind of required to write business, right? So all that effort now can be repointed towards, actually, how do we make the best underwriting decision, right? And that's the bit that really adds the value. All the rest of it is just process to make that great decision happen, right? And so the magic of that is freeing up so much resource to actually then focus on making better decisions. If you can do that, you can probably write quite a lot more business. And so that's the way, the really smart kind of insurers who are doing a lot of trading, either with us or kind of in other smart follower approaches, they're looking at that going, how do I repoint that resource? And they're seeing their kind of, they're writing a lot of new premium, but I think most importantly, really profitable premium. So this is actually premium that can come in at a lower expense ratio because you're not spending all that resource manually trying to process it. So there's a big benefits on the insurer side. On the broker side, well, the benefits are enormous, both in terms of the client. So the client's now getting a far faster answer. They're not waiting 2 to 4 weeks. They're getting same day responses on, right, I can do this lead and I can do this follow. Would you like to bind it? So the broker now looks much better. So they're going to start winning new business, and they don't need to spend 2 to 4 weeks going around the market, either on emails or walking around, speaking to people, and that all costs money, right? And as we were saying, kind of once they got the lead quote, any time spent on a policy is costing the broker and the client ultimately time and money that they'd rather spend elsewhere. And so if you can free that up, well, then that's a massive benefit to the brokers. So, you've got these big benefits on the broker side, you've got big benefits on the insurer side. And now there's a devil in the details, working out actually how you do it really well and finding those good opportunities for the two sides to be able to trade kind of more effectively with each other.
It's so amazing, isn't it? I worked in the markets, and this is my 21st year in the markets this year. And, the lead and follow, the difference in time for this inside a business, it was always a sore point, right? The relative time it would take to get onto lead business versus the time and effort and risk required to be a lead underwriter. And it's so interesting, isn't it, just to reflect on how much of that time can be repurposed to do more of the useful things. It was like very clearly a dead weight loss for both sides, right? We know there's going to be follow capacity. We know it's going to be there. They all trust good leads, but actually it was very, very inefficient. So it's just so interesting to reflect on, right? I don't know if you see, if I were to ask you to think about the impact InsurX has on the broader market, do you see people creating new products? Do you see, a broader distribution of follow capacity? What do you see happening with respect to the time that becomes available? Because follow capacity is very interesting, right? There's, if you can increase the amount of follow capacity in the world, what does that do actually for the market?
Yeah, so I think, so at a simple level, it's going to have sort of two benefits. I think one, it's going to increase capacity. The market will just be able to write a lot more business, right? And so that means potentially the London market can go, okay, well, if we do, what is it roughly? It's $130 billion premium today. Maybe can we just double that? Yeah, can we go to 260 and just have the same number of people, but now we're doing twice as much, and maybe we're doing it kind of more profitably. So I think it will kind of increase capacity. But I actually think the bit that's really exciting from a client perspective is suddenly you haven't got a load of people all sort of doubling up the same work. You can actually spread people and go, why don't you all have, particular niches that you focus on? And so then you get people being even better underwriters in their particular domains, and they create even better products for clients of the brokers in those particular domains. And that means that then suddenly we're actually creating better products, which probably means the clients buy more insurance. Yeah. So actually the whole industry gets better. But at a societal level, we actually start to tackle some of the big problems in society where there is big underinsurance, right? But at the moment, it's either too expensive to buy insurance, or there's people just saying like, sorry, we can't provide coverage. We haven't been able to spend the time to think about the solution that's required to do that. Well, suddenly we're now freeing up capacity to be able to solve those thorny problems that if we can solve them, actually have massive benefits to the broader society.
Yeah, definitely. The coverage gap's a big thing, right? It's incredible how big it is. It's amazing in the world that we live in today, right? You look at the broader market where the world's never felt more risky, but actually the amount of new products being created to meet that risk it's not happening as fast as I think as anyone would like, right? Because clients would obviously want more richer coverage, but so do insurers, right? There's more opportunity for them to sell and transact business. So it's very interesting to think about how that fits into the lead follow dynamic.
The way I think about it is actually one of the reasons I decided to join the insurance industry in the past. It's fundamentally a good industry. The world is getting generally richer. So there's a lot more people out there, and it's getting riskier, right? So there's more stuff. There's more stuff that needs insurance, right? So the job of the industry is to go, how can we do this in a better way so that it's easier for those people to buy their insurance? And I think that's what this kind of this big bang in technology, certainly from a commercial and specialty insurance perspective, allows suddenly that the system can handle a hell of a lot more, and it can just do a better job for the ultimate end client stakeholder.
Yeah, agreed, totally. Maybe looking beyond the tech, I think I'm always interested to talk to founders who've driven a wedge into what's historically been a very hard to penetrate part of the market. And so, I'm interested, Gilbert, in how you got brokers and underwriters comfortable with, this exchange kind of method in the first place, right? When we've talked previously, and you used a wonderful phrase about like the fast lane, right? Try and create a fast lane, right? I think that's really, really compelling, actually. So how did you do that? And then what's worked in driving the kind of cultural and behavioral adoption? Because look, in our markets, everyone is busy, right? Like getting them to change the way they do their work is the hardest part of any problem, right? Technological or otherwise. So, what was the kind of the eureka moment you had?
Yeah, the reality is, it all looks easy now. There were some definitely humbling moments in the first couple of weeks and months after I quit my job. I had a nice job as a head of strategy at a large insurer, reinsurer, and I thought I had it all worked out. Strategy was, we had board decks and we knew exactly what was going to go on. And then you suddenly realize you go out there and people, they don't really care about your idea. They want a solution. They want something that's going to make their life better, not your great idea. And that was very humbling. But that it meant that I started to understand, no, we need to be a sort of servant technology provider. How can we understand how we can provide something that's really useful for end customers? And I guess we focus, we for us, the core kind of person that we really care about is the underwriter, the broker, right? How do we actually make their day life better? And what we found is if we started to make their life better, well, they would start to use some of the technologies we were building. And if we did that, then we would grow as a business. And so we just really, really focused on a particular group of people that we cared about and went, how can we make their life better? And I already said today, not in a year's time. It can't be in a year's time or in 3 years' time or when their board has signed off on it. But actually, how can you just make their life better? Because if you can do that, that's how you get that kind of viral adoption.
Yeah, yeah. And I think, it's so interesting, isn't it? The number one competition in almost all industries is for time and attention, right? Like that's the number one thing you have to do. Like if people want to spend their time and energy engaging with your product, generally they'll be very satisfied, or if they're not, they'll give you feedback, right? And then you'll have the ability to make it better. I think, you touched on something at the beginning talking about smart trading. So maybe you can look into the future for us a bit, Gilbert, because like you say, smart follow a few years ago, it was a twinkle in a couple of people's eyes. And now it's, in a very growing sector, right, in the market. But if you look ahead, 3 to 5 years or even a little bit earlier, depending on, the traction in the market, how do you see kind of capacity, the trading, data exchange, actually evolving, and what's next for InsurX and you in the evolution of the market?
Yeah, so I think, look, smart follow is, we started first with the vision. How can we kind of plug any broker, any insurer, so they can trade risks without friction? That was always the mission. That's where we started, and smart follow became the best place to start with that. And so we very firmly believe that this is a movement that's going to grow significantly beyond just the kind of the smart follow or engines. I think, if you look at that, it's probably going to grow onto two vectors. It's going to grow both internationally. We're already starting to see that. So we're seeing smart follow now not done just in London, but how can it be done overseas as well? And, we're part of something with Gallagher, allowing Gallagher brokers in South American countries to access London capacity using our technology. So I think that's a fantastic example of a kind of international expansion. I think what you're also going to see is it's going to spread, beyond just the kind of the follow element of the London sort of syndicated market into, well, maybe it's into lead. Is it into 100% place business? Is it into the delegated, the massive amounts of delegated business that's kind of written both in the London market and kind of around the world? And I think in all those structures, what you're going to start to see is how is data freely exchanged between the parties in the ecosystem, to allow for better risk transfer. And so that's almost like the North Star that we're focusing on, is kind of, well, how do we allow parties to trade more of each other, leveraging that data? And what will guide us and will guide the immediate route will be, how do we unlock value for those users? How do we make it kind of their life better tomorrow?
Awesome. I think that's a wonderful place to wrap up the show. How we make our users' lives better, do a good job by the users, and you build a successful business, as you've clearly done. Gilbert, firstly, congratulations on the amazing success you've had. I remember talking to you, when we were both much earlier in our journey, and just looking at where you've got to today, and very clearly the potential for billions of dollars of premium to flow through InsurX is very, very exciting. So great job, and congratulations. Thanks for coming on the show.
Brilliant. Appreciate it. Thank you.
That's it for this episode of the Underwriting Intelligence Podcast. I hope you found it useful and thought-provoking. If you did, don't forget to follow or subscribe wherever you get your podcasts. And if you know someone in insurance who'd find this valuable, please share it with them. I'm Amrit, and I'll be back in 2 weeks with more insights that matter in the insurance world. Until then, thanks for listening.